Good morning, traders. It's Friday, August the 21st. Taking a look at the charts, we've got some pretty big price action going on in the markets this week, really. And yesterday was a massive sell-off in the broad equities market. Most indexes down 2%, which is huge. We haven't seen those kind of moves in a while. And it goes to show volatility has definitely picked up, and we could be entering a much higher level of volatility going forward. But I think in the short-term basis, we're going to see a little bit of a rebound, a little bit of a pause here. But let me just run through the charts real quick. Now let's just start off with precious metals before we get going. Now here is a US dollar index. We can see over the last, this is a daily chart. Over the last few weeks, we've seen the US dollar couldn't get through this resistance area and it's reversed lower. And of course, a falling dollar helps commodity prices. So if we jump over to take a look at the price of gold, you can see gold has gone the inverse direction of the US dollar index. And we've seen a big move up here with gold. Now overall, it has just reached some pretty critical resistance. It ran up overnight, sold back down. We're flirting with this 20-day moving average and also this breakdown zone. Of course, it was also key support previously, so that now has become resistance. So if we just jump back to kind of some big picture of the precious metals, this is the chart of gold going back 2008. We're in accumulation zone, had a markup value of stage 2, bull market. We started to get into a topping phase and then it broke below these critical lows here. We've been in a decline, stage 4 ever since. And really this knee-jerk reaction in gold at this point is nothing more than just that. It's an oversold rebound and bounce. I know a lot of people are getting really excited about gold, and you know, it would be nice to see gold take off and never look back, but overall it is still down. It's still in a full-fledged bear market, and it has a lot of work to do before it can build a base and before it starts to move higher. And of course, it won't break out of this falling zone until we see it start to make some significant highs and start to form some bullish patterns. So unless you're trying to pick a bottom here, you know, it's still clearly in a downtrend. Now, if we take a look at silver, same thing. Silver's got a little bit of cleaner of a chart. It's been stair-stepping its way down. We're clearly under resistance. We broke below some critical support levels here. We've just had a knee-jerk reaction back up to resistance. We could see this continue to move up. Who knows? The full range for silver really is right in this whole range. You can see the spike low that we had over here. So we could easily see silver continue to chop around in this range, just like we've seen in past times, and it could still potentially break through the floor and head lower. So the last couple days, this big percent pop in precious metals and miners still is just nothing more than that. It's just a bear market kind of rally. So let's just take a look. Now let's go over to actually the equities market. Let me pull up this chart here. Let's look at the VIX. The VIX is, I did this chart several months ago that we were starting to get into this elevated kind of point where we're seeing the VIX really kind of hold up. We're seeing the declining stocks, percent of stocks trading above the 200-day moving average, they continue to slide. This is what we've seen in previous trading here. Let me just back in 2007 when the stock market started to put in a top, we're seeing very similar price action. There's fewer stocks holding the market up. We're seeing volatility pick up, meaning there's big distribution selling going on, big drops in the market. There isn't the support there when the sellers step in. And we're at the point here where eventually we're going to see, I think, a massive rally or spike in volatility. We're going to see a big decline in these stocks. And that's kind of where we're at. Now, if we just continue to kind of go down this big picture kind of analysis, this is the TSX. We were in a stage 1 base there last year. Over the last couple of years, we saw a nice move to the upside. It's been kind of forming this, I haven't really updated this chart in a long time, but this kind of topping phase. I do feel as though we could see it continue to come up and have a little bit of a bounce. As commodities kind of firm up a bit with precious metals, we'll have some support here. But overall, we've got this topping phase. If the Canadian index, the TSX, breaks this 13,600 level, then I think we could be starting another bear market in the Toronto Stock Exchange also. Looking at the US dollar index, it has been rallying up. It's been flagging here. The question is, Are we going to see this break down and have a serious collapse, or are we going to see it spike up? Overall, the chart's not really pointing to a whole lot. Recently, I just showed you the daily chart. Again, this is the weekly chart. Daily chart's been correcting here for about 3 weeks, and we've been seeing the price of gold and silver and everything kind of start to move up with that weakness. Looking at the SP 500, this is the chart that I really wanted to show. We have this is kind of the big picture. You can see the previous bear markets that we've had. This was the 2000 and to 2003 bear market. This is the 2008, 2009 bear market. We're having very similar type of price action again. We've had 7 years of rising prices, and it looks as though we're breaking through the support trend line. We're seeing divergence. Relative strength is weakening. We're seeing volatility pick up. We're seeing the market breadth. Fewer stocks are holding the market up. It's getting very fragile, just like a plane with its nose up here. It's losing its momentum. It's starting to shudder and break through support. Eventually, it's going to turn into a nosedive until it can recover and then eventually come back up. So we're getting to this point here where we're going to start to see something very similar to what we saw back here, where we get an initial massive wave to the downside, a huge move on a percentage basis, another 8-10% from where we are, and then we'll have some type of pause or consolidation, and then that'll be the real start of the full-fledged bear market. But overall, that's where I think we're at. At any time we could see a massive collapse here, and then we'll have a multi-month kind of pop or consolidation, and then we'll go into that big decline that could last 12-18 months. Going down here to the bigger picture, going all the way back to the 1950s, there's potential we don't have quite the severe correction that we've seen in the past. We might see something very similar to what we saw back here in 80-82, where the market kind of just fades back and corrects, settles into support, and then the markets and the currencies, all these things start to kind of clear themselves, and we see a massive multi-decade cycle move to the upside. And that's a potential, but overall, I still think we're getting a correction. The question is, how big is it going to be? And things could get very ugly going forward. So we'll just have to see. And of course, when the trend is down, long-term investments should be in cash or using some type of investment that rises in value as the equities market falls. Now let's just jump over to the charts here. Let's go to the SP 500 futures. You can see where we're trading this morning. This is the daily chart. Big drop there yesterday, slicing through this critical support zone that I've been talking about for several months. If we break this level, which we have at this point this morning, yesterday the markets came right down and tagged that level and stopped. In overnight trading, we're seeing that flush through that level. Of course, it's overnight trading, so volume is thin, and the market makers can slice these levels and flush out all the stops. So anybody who's got orders in, they're going to be washing out all these stops, and then this could be a reversal candle. We could see a strong rebound back up to somewhere the 2080, 2075 area, possibly all the way back up to the 2100 area going forward. But this looks like we're going to see some washout selling today. Everybody's going to panic out of their positions. We're going to see the volume ratio spike, which usually anything over 3 is panic selling. Anything over 9 is usually an intermediate type of washout. And yesterday we saw 7 on that indicator. I think today we could see some follow through panic selling and see that spike up. And this could be a significant pivot low for a really sharp knee-jerk reaction to the upside. Just like what we've seen over here, we get to these extremes, you get these knee-jerk reactions back to the upside. We've seen it happen over and over again, very quick, very violent volatility. And we'll see how things recover, but damage is starting to be done. We're breaking through this critical support zone. And I think the downward slide, the momentum here has shifted a lot more in the last couple days here to more of a downward bias than anywhere else. Jumping over to energies real quick, let's just take a look at natural gas. A nice pop there yesterday. It's giving back those gains again today. We're not really going to touch anything here. It's still basing, stuck in a sideways range. We're just going to ignore natural gas for the time being. Crude oil down 1%. Had a big down day there a couple days ago, and we're just really sidestepping. The trend is still down. We haven't seen any reversal pattern on crude oil yet, and it looks as though it's going to continue to go lower. Looking at the XLE, it's been completely annihilated. It started to show some strength here. starting to hold up. We didn't get any kind of impulse wave. We really need to break some previous pivot highs for an impulse wave to start, meaning we need price to come up and break a previous high, and then it needs to consolidate and pull back. And that would be the first sign that would give us something bullish. But at this point, we're just making lower highs and we're making lower lows. And the trend, that's the definition of a downtrend. So we're still stuck within it. Anyways, that's pretty much it. If we take a look at utilities, they've been on fire. Same with bonds. They've been kind of moving together as the safe haven plays. The utility index is really, it's had a nice impulse wave. It has broken two previous significant highs. So this high here, this high here. So we have seen that big impulse wave. Usually you want to see two previous highs broken, and this could easily consolidate and come down here. It could be an opportunity for that to continue to move forward. But this is a short-term safe haven. We're going to see money flow into this, but in the grand scheme of things, when the U.S. equities market goes into a full-fledged bear market, all equities go down, so these will get annihilated and they will sell off with the bear market. Just on a short-term basis, investors quickly move from speculative stocks into utilities and dividend paying, so we see short-term strength while the rest of the market is selling off, but eventually these just get annihilated with the broad market. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.